You're joining us on this special conversation with L&T Finance, which has just come out with its Q2 results. I have with me Sudipta Roy, the MD and CEO of the company, coming into this conversation. Welcome, Sudipta, to this interview with NDTV Profit. I want to start off this conversation with the highlights of this quarter. What, to your mind, stood out as the main driver for this strong quarter that you've had?
I think, Q2 is traditionally a weak quarter for BFSI firms, but what we have seen this quarter is a very strong disbursement momentum. As you can see, disbursement grew by almost by 25%. Now, one of the sort of important contributory factors to that was that the microfinance industry sort of asset quality issue, which had been lingering for almost a couple of quarters, actually has shown signs of resolution, and we saw our microfinance disbursement grow quite a bit. Over the quarter, we did about 6,300 crores of microfinance disbursement, which was almost close to about 2,000 to 2,100 crores per month, which is almost the highest ever that we had done in the in March 2024. So in a way, the normalization of the microfinance disbursements led to some good amount of momentum in our disbursement growth, as well as the growth in personal loans, as well as in the two-wheeler business. So overall, most of our major lines of business actually performed very well in this quarter, which gave rise to a good disbursement momentum as well. In terms of the collection efficiency on the microfinance side, we saw reasonable normalization. Overall, our microfinance collection efficiency in the month of September ended at about 99.5%, though it's a shade of what we consider as business as usual, but it is almost trending towards normal. So obviously, we are seeing the fag end of the microfinance asset quality, industry asset quality issue, and we expect that H2 will be a far more normal operating period for this business. In terms of the other lines of business, every line of business has shown a sort of movement forward, and we expect that H2 will also be a very good momentum in terms of disbursement as well as asset quality improvement, driven by the GST 2.0 reforms, as well as the impact of the several credit improvement initiatives from a digital perspective that we have been carrying out in L&T Finance for the last 12 to 18 months.
You've also seen a lot of growth on the gold loan front. There again, because of the strong growth that you've seen, so that you're adding fresh branches as well, about 200 this financial year. What is that sort of trajectory looking like for you on the gold loan front?
See, this is a business which is a high-yield secured business. Obviously, goes well with our overall trajectory of adding more secured businesses to our overall product portfolio and balancing our product portfolio more prudently between secured and unsecured businesses. So obviously, this is a business we will focus on quite strongly over the next coming quarters. We have announced yesterday that we are going to set up almost 200 branches in the remaining part of the year, which almost means that we have to open one branch every day for the remaining part of the year. We have got a good business and a good franchise which we acquired from Paul Merchants Finance Private Limited, and we amalgamated the business into L&T Finance earlier in June this year. And I'm happy to state that the business integration has gone very well. The disbursements momentum is continuing. In fact, it is increasing with every passing month. And I do believe that the addition of the branches, especially in the geographies that Paul Merchants is strong in, also in the geographies that we are strong in. For example, we will see a reasonable amount of expansion in the eastern and the western part of the country, apart from the northern part of the country. And so overall, these 200 branches will be more or less distributed in the northeast and west of the country. And we expect that the overlap with our rural business finance portfolio, the microfinance portfolio in which we are strong in, will give us a very ready-made catchment in the villages that we operate in to funnel into our gold loan branches. To, in a way, the gold loan branch actually will add as a force multiplier to the existing business that we have in the microfinance business in terms of customer catchment. So we are very bullish about this business, and I think this business will continue to perform very well within L&T Finance in the quarters to come.
I also wanted to pick up on the margin trajectory front at 8.42%. There's an 18 basis point increase on a quarter-on-quarter basis. Of course, understandable because your cost of funds have also improved. Considering that we are expecting another rate cut during this year, I just wanted to get a sense of what your outlook for the margins are. Have we peaked? Could there be any easing? Could there be any change in the margin front?
See, what we have originally guided was that our NIMs plus fees should be in the range of between 10 to 10.5%, and obviously the NIMs have seen a expansion this quarter primarily because our cost of funds dropped by almost 36 basis points on the back of some rate transmission that has happened from the RBI rate cuts, and again prudent management of our liabilities by our treasury team. I do believe that the benign rate environment will continue for some time because the inflation is also pretty benign as of now, given the sort of the data we saw over the last week. Though it is not right of me to speculate that whether there will be another rate cut, etc. But I do believe that the rate transmission which has happened has not happened fully. So some amount of rate transmission is still yet to happen. And I do believe that that will give us a little more rate efficiency maybe in the coming quarters. So overall, I do believe that the holding pattern that we had talked about between 10 to 10.5% on NIM plus fees should be possible in the coming quarters for us. We are also focusing on improving the margins of all our lines of business and also improving the fee line of our business. So overall, I think it should maintain a holding pattern between the sort of the corridor that we have guided for.
Also, Sudipta, just wanted to get a sense about the rest of the financial year, right? Like, so this year we've got the GST rate cut, we've got the broader liquidity effects of the CRR cut that the RBI has announced, that flowing in, general improvement in customer sentiments. To you, for L&T Finance, what exactly is the growth trajectory looking like for this financial year in the last 2 quarters now?
See, a couple of things. In Q2, obviously, the full impact of the GST 2.0 sort of volume spike was not registered because, it was towards the fag end of the quarter. And many of the sort of the dealers, especially in the auto OEM segment, were trying to sort of sort out some of their operational issues during the last week of the quarter. But we have seen reasonable uptick in both our two-wheeler disbursements as our tractor disbursements in the month of October. And I do believe that this uptrend will continue, and it will continue strongly towards through Q3. And I think in Q3, especially in the two-wheeler segment and the farm tractor segment, I think we'll have very strong growth. Our personal loans business continues to grow very strongly. You can see that the personal loans business on a year-on-year basis has grown on 100% plus in terms of AUM growth. And in terms of the business momentum in the personal loans business, the microfinance business, as I said, is seeing sort of the cessation of the various stress factors that had clouded this particular industry. And I do believe that the microfinance sector is also resuming its growth path between Q3 and Q4 of this year as collection efficiencies also tends to normalize. So overall, I do believe that Q3 and Q4 will be very strong growth quarters, not only for us, but for the entire industry. And I do believe L&T Finance is, with its digital channels that have fully matured, with its fully digital underwriting tools like Cyclops and our newly introduced automated portfolio management tool, Nostradamus, which has gone live in the month of August, we are actually fully capacitized to take the benefit of this sort of the secular uplift of consumer demand and consumer offtake that we're going to see in Q3 and Q4. And I do hope that the coming two quarters and H2 is a very, very strong quarter, strong half for L&T Finance, and we should show up in asset growth, we should show up in good asset quality, and we should show up in, obviously, subsequently in profit growth as well.